Hi, this is Zach Meir with the US Chartbreakers here at Zach's Traders Cafe for Tuesday, the 8th of April. Starting off with the S&P, where we have had various scenarios in terms of the downside. The first one was that falling support line there from December around 5,500. The second one was the main support, 52.20. And the worst case scenario target, the green one there, 48.70, let's call it. We basically hit that almost exactly on the nose. RSI now down to 23, which is about as low as it has got in the recent past. Current situation is that we're looking for at least a rebound back towards that August support there, 51.20, ideally up to 5,200, even if we then fail and head back towards 4,800 again. Moving on to the Nasdaq, and here the situation has been equally dire. What will be interesting here is if we have to head, or we do head towards that worst case scenario target there, that support line projection from March last year around 15,700. Otherwise, the battle here is to get back above 17,500, the old support area from back in August. So it's Nasdaq's work still cut out. And the main glimmer at the moment is that we're just very oversold, RSI for 24, although not extremely oversold, which does allow for a potential fresh move to the downside if we can't clear 17,500. Moving along to the situation at ARTV, which is called Artiva, and here we've got a potential bear trap rebound. The stock obviously not in a good way over the recent past. We need to get back above the old February support there, around $3.30. End of day close above that is required really to get us back up to the 50-day moving average area at $4.40 plus, which has been the resistance for the shares since the start of the year. Ideally, though, on this occasion, if we can get back above $3.30 quickly, we could head up to $6, the last month's resistance, as a squeeze higher. The other point to note is that we do have bullish divergence here as well, so that suggests that there is accumulation going on this particular breakdown that we've had, and that is why potentially $6 by the end of next month could be on the cards. Moving on to ANRO, which is Alto Neuroscience. Sounds very trendy, and here you can see that we've been in a falling trend channel after a horrible gap down, so maybe this is finally the end of the bear run. We had a good hammer candle to start the week, and in fact on Friday, and a very solid candle yesterday, so looking for the 50-day line there on the top of that falling trend channel, hopefully by the end of next month. Or even sooner, potentially the end of this month, $3.13, the level there. This stage only back below Friday's resistance around the $1.80 mark would be a negative for the shares. Next up is Bluejay, and here we've gapped up within a broadening triangle base, or a rather rough one, but here the situation is that I want to see an end of day close back above $8.50 really, to confirm that we have a turnaround and we could then retest that brief spike from November at $12, but obviously a rather fidgety situation there, and back below the old December peak there at $7.20 might suggest that this is a flash in the pan type of rebound rather than a lasting one. Moving on to another situation which probably have traders scratching their heads, Bionexus, and here you can see that we've got this broadening triangle and looking for an end of day close above the 50-day line there to then give us a move up towards $4.80, hopefully later this month for the shares. Moving on to a stock which, as you can see, it has been up or was up 800% yesterday. Basically, the last time we talked about this, we were looking for a target at $8 at the top of that rising trend channel base on Janover. The shares at that time were actually at the $5.50 level, and you can see that after that we actually fell down to hit the floor of the channel and then had the big move, so the market cleared out the weak hands. But interesting there, that 800% rise, and obviously we need the dust to settle before seeing what may happen next. Moving along to the situation at Logprostyle, and here you can see that we're guessing that we've got a rising trend channel, top of the channel there, up to $8, and we're looking for that while we remain above $3.90 recent resistance on an end of day close basis. The next situation coming up is Endra, and here you can see that it's obviously not been a great past for the history for the shares, but possibility of bouncing off a falling trend channel here. Base of the channel there at $3.65. Ideally, we get a decent end-of-day close above the 50-day line so that we can then go for the top of the range through $6.60 by the end of this month. On to start with a rather esoteric name, and here we have, if I can type it out correctly, Newton Golf. Here it's potentially a falling trend channel turnaround. We've already had a bit of a turnaround for the share, so gapping down in the middle of last month and gapping up this month. It's a bear trap hide and reversal. Looking at the top of that channel there at $5 plus by the end of this month, while we remain above recent resistance at $2.30. On to the last two. The first one should be an obvious winner in terms of the aftermath of the China export ban on rare earths. Rather nasty action by them, but here we already had the gap higher last week, and or rather last week in fact, and here above the neckline resistance around $7.20, looking for at least the 50-day moving average at $11 over the next few sessions. Finishing off with United States Steel, which sounds like it might be maybe tariff-proof. Here we've got a rising trend channel that's been in place since back in November, and we're looking at the top of the channel there at $52 by the end of this month, especially while we remain above the rising 50-day line there at $39. In fact, ideally we'd stay on the right side of 42, which is the latest resistance for the shares. That's it for me today. More updates tomorrow.